All right, let's see if this works. Give it a second to pop up. There we go. All right. Remember that liquidity zone. Hey, there I am. Yeah. Yeah, it gives a few seconds. No, currently we have to block all of the voice from the Discord channel because technically we should have everybody sign waivers to release that. Because it goes to... Right. And we're just using this for now to proof of concept. And then later on we'll be able to stream directly to the site. All right, remember my green line here. This is the previous accumulation zone. Bam, back to that 392 test. Like clockwork. That 1 minute 200 period, man, I'm telling you. Anywhere you see a 200 period on any time frame, just a standard simple moving average, it is important. Here you got a first leg, accumulation, second leg, perfect measured move to the 392 pivot. And now we're going to accumulate here with a high and tight flag. If this breaks over, we run back into our range. If it gets above this zone, we've got a setup for a measured move all the way up to 394.50. Might even push to a third leg would be like 395, but that would be the top of that zone, wouldn't it? At 396. So this can be your first leg. You know, a full measured move would be 393.50, and a third leg would be up to 396. But if it fails here, we run back down to 388 pretty easy. IWM bounced right off that 168, that critical support zone, and it's back heading for the top of the liquidity zone. Right. Yeah. It's got to be something catastrophic. So like I said, I think we'll accumulate here between our previous accumulation zone, which is this green line here. Oh, damn, we're breaking out. 392, it just tested above it. Here we go. First leg on the 5-second chart, 392.50. We can head all the way up to this extension here. Half leg complete, 392.50-ish. 392.63 was the peak. I love measured moves. And I'm keeping an eye on Deutsche Bank here at the $9 level. How much you want to bet FRC is about to break 1250? Let me see if I can get anything on the news ticker. Bullard, would be a disaster for us to abandon a 2% inflation target. Would send the world back to the 1970s. Business will adjust to difficulties in labor market, but it will not happen fast. Businesses are still scrambling for workers. Yeah, well, plenty of jobs out there. But they don't want you to give up your job to help inflation, do they? That's exactly what they want you to do. Yeah, they need to recalculate the inflation target for sure, because the 2% target has become passe. It's pretty obvious. Right. 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 Typically how they operate. And, if you're making $30 to $50 an hour, it's significant. But if, you're making the minimum wage, that does nothing for you. Doesn't even accommodate cost of living increase. I know it. Dude, there was some chick who posted a TikTok about she was like throwing away her current job because she could go and be a cashier at Domino's for $18 an hour. Oh gosh, I remember when it was $4.15 an hour. That was when I started my first job, and yeah, well, I was in Southern California, so it was pretty much the same. And then when I started working, a few months after I started working, they raised it to I want to say it was like $4.25, and then within 6 months of that, they raised it to like $4.85. Right? Yeah. Well, for me, I was living in Big Bear, California, and my rent on it's kind of a cottage with an A-frame. They called it a cabin, but it wasn't really a cabin. But at any rate, it was like $45 a month, all utilities included, so it was a little bit spoiled. At some point, I was like making a small transition from living off of top ramen to living off of canned meat, I guess. So it got to a point where I realized, like, working for minimum wage sucks. I need to do better. And for a short time, I started a second job. I was doing the cliche thing, and I was just barely 18. Did the fast food thing. I started painting houses as well, as a secondary job, and the house painting started to pay a bit more because the skilled labor involved in it. I mean, it's not like rocket science, but it takes a steady hand to paint well. And of course, the new guys always stuck with the cut work and all the sanding and all the hard stuff. So, you start presenting your skills and be like, yeah, I can make that edge line without taping it. I can do a complete cut in a room without ever touching a lid, so to speak. So the ceiling doesn't get cross painted, so to speak. Long story short, that started paying more. So I'm like, well, hell with the fast food job. I'm looking to put in my 2-week notice, and then I realized that my true passion had an opening for snowboard instructor. So I started doing that, and this was like the day after I put in my 2-week notice. I got picked up as a snowboard instructor, and I'm like, well, this is going to suck. I'm going to work 3 jobs for a short time here. But at the time, minimum wage was like $4.85 an hour, and the snowboard instructor job paid $10 an hour to start. So I'm like, well, that's a no-brainer. So I went and put in my 2-week notice with the fast food place, left them, and then put in my 2-week notice with the house painting place and left them. So for a 3-week period there, I was working 3 jobs. And then the cool thing about the snowboard instructing job is you start out, you teach like groups of 10 people, and it pays decent. It's $10 an hour. It was it was more than double minimum wage. Pretty nice, but it was seasonal. It's like when the snow melts, you're out of work. And in Big Bear, California, you get about a maximum 3.5 month ski season. So being a snowboard instructor for a while, I was teaching groups of kids between like 5 and 13, and occasionally an adult or two would be in the class, and got really good at teaching kids how to snowboard to the point where their parents would bring them back to me for private lessons. Private lessons paid $30 an hour because the park was charging $65 an hour for private lessons, so they paid pretty well for the instructors to do so. So they always encouraged us to try and sell the service of private lessons because, of course, it made more revenue for everybody. So within about the middle of the second month of the season, I was finding myself with 40 plus hours a week doing private lessons. And I was just like, wow, I made enough money to like retire for the summer if I wanted to. Of course I didn't, but I was able to have enough cushion to realize, hey, I don't need this job, So during the summer, I would go back to painting houses just to kind of keep it going. But I was, barely 18 at the time, so it's like, when you have that kind of money put away, it's like, let's throw a party, So you make a lot of friends that way. But I got to know some key people in the area, and by the next season, I was in kind of good position with the groundskeeper for one of the historic mansions in Big Bear called the Knickenbocker Mansion. And every year, they would throw kind of a rager there for, believe it or not, it's kind of humbling to say this. Every year, some of the playmates would be up there to do snowboarding lessons, and they would go and party at the Knickenbocker Mansion. So, got to party with playmates. So that was pretty cool. All right, we've accumulated right around the 392 pivot for too many bars here. This is yet another rounding top, and this is yet another cautionary tale of don't get trapped. So make sure it breaks before you go short on it. But be ready for a quick snap of volatility. How do we find that? Well, we know where the key pivot is for previous accumulation. That's this green line here. And I think we're going to visit it one more time. If it breaks this with force, we know it can go short. We can go short to the next price line down here. That's actually an old angular. Or we could actually draw it with just a quick fan line. So we can take this peak here, through that accumulation there. It gets us to the same place. We could also go and find the substructure by going through here. Actually, right here. So if it gets forced below here, we'll expect a pause here. If it breaks this, we can go short on the break here and run it down to here. But if it holds this line, it can give us a very fast bar, like a 10-point bar, just ripping to the bull side. and we can wait and short that. All right, so we broke the green line. We're down to the secondary. This will be, okay, if you went short here, you're hovering over that button waiting for this break. But if it comes back to your entry, you can snap that shut before it rips a face off. Cool, we're breaking the secondary. Let this close. Let one bar close below it, and it's game on. But it can still reverse here. There's a wick. Got the hammer. Close the bar. Got to break the support of this wick. Remember, there's 1 minute liquidity here too. No deal yet. If it can't break this with force, you got to take your profit on your little short here and wait, because this can go and rip 10 points. Just pay attention to what that 1 minute chart's telling you. It's got 30 seconds for that candle to close, and it's right on top of that liquidity box. So like, you can be short, but be very quick to hit that cancel and get the hell out of the way button. Accumulated, we're back on top of the 8. I'm going to use my cursor to find the tops of all these candles and just line them up. So if it breaks above them with any force or a bar, close that short and be done until this pattern finishes working out. But if you break the support level with some force, we know where the target is. Bottom of that liquidity zone sets right down here. There's your break. No comply, we're waiting. See, it keeps threatening to run up. It's a very difficult pattern to trade. So if you did go short here, cool, but I wouldn't go short on this break just yet. You want momentum. So like, if you got short here, you can sit there with your hand on the button ready to go. This is dangerous to enter a short position here. See, we're right in the top of that liquidity box still, and now we just got another candle print, so we're waiting. Looks like IWM did indeed reject the top of the liquidity box up here, and we're going to go back to 168 likely. And when it gets back there the last time, we'll see if it's going to continue to break or if it's going to bounce. And who knows, we might get an emergency Fed meeting out of nowhere. All right, we're still slowly melting. We're on an angular here too, by the way. That's just out of this guy here. Steady. So we got an accumulation and break after a leg. That measured move takes us down to this guy right here. Target's still there, but at any point we can get a quarter push or a half leg or a 3/4 leg or a full leg, and all we got to do is sit and wait for the signal to close our short from this break. Aha, back to our line. So it keeps making threats to reverse here, so this is where I would be weary. And we hit the midpoint on the liquidity box with a doji, so there's your 1 minute bar. And we're about to test previous support from this range here. If it breaks that, get out of the way. Done. You can collect down here, or you can recover here and still close a profit. Really difficult pattern to trade. I don't recommend it to those who don't have the experience to be able to scalp like that. But when you do, you can still mess with it. They faked it out. Awesome. Now, nice. I still gotta get that. I still gotta get that Yield Hunter program to work right. I don't mess with TOS too much yet, but I'm still kind of playing with the platform. Yeah. Nice. Nice. Well, hey, I'm about to do a different kind of dance. I gotta get up and let some coffee out. I'll be right back. I am back. Let's see, did I miss anything really fun? Not really. At this point, while we're playing in this liquidity zone, it's going to be like watching paint dry. Couple things to pay attention to, though. We're in that wedge. We've achieved almost a 50% retracement of it by coming up and testing this liquidity box here. But let's look at the bigger picture. We're likely to follow through down to 388 pivot. But we can bounce here off the 392. So above the 392, we can run retracement. 394.60, 395, 396 possible. As long as it stays below that 392, the 388 is the target. We might see some liquidity down here at like 389.50 if it hits it though. So I don't have to mark the box here, but there's a big old wick right there. The other part of this is your trend, this is your retracement or accumulation. A breakover for a full measured move would put us right on the 388, possibly extend to the 387 by the end of the day. So we'll just wait and see what happens in this area. And I'll be around for a few more minutes, but I'm going to probably knock off at about 11 so I can go eat something real quick, and then I got to get ready to go on with Creed over there at money.net for like 15 minutes. And if you check out their YouTube channel, they don't have a whole lot of traffic on their YouTube channel. That's not their primary feed. They have it's kind of like, I don't know, watching a less produced version of Bloomberg. Like they got all these interviews going on. They're talking to a lot of different investors and traders and a lot of different people in different sectors of the market. And interesting people, well-known people. Their subscription service is where they primarily focus that live feed. So it's just interview after interview after interview, just talking to people all day long. The stuff they put on our YouTube channel is just to kind of like we're doing. We're just showing people what we do. That's kind of what they're doing. So they do have a YouTube site to check out in case you're interested in seeing that. And I've kind of evolved while I was doing these Friday interviews every week for, gosh, about almost a year now. I started out, they were very intrigued to know about the wheel trade strategy, so I was able to break that down for them. So they put me on there as the wheel trade guy. So they'd come in and talk to me about different things I was looking at wheel trading and just explaining the strategy a little more. Now it's like I'm kind of being shifted into the price action guy, so they see that I'm more of a chart technician than anything. So oftentimes they'll throw a couple tickers at me and ask what I think, which is intriguing. People of that caliber asking me what I think. So that's why I still do it. But at the very least, it's like I want to get us out there in front of people and also help them to do their thing. So they're more of a data center. They more focus on a really up to the second news ticker. They have a lot of different tools you can use on their platform to track different data. We're on the other side of things. We like to teach people how to trade and teach people how to utilize that data to have an advantage in the market. But for us, it all comes down to price action. And then there's also strategy. So if you stick around with us for long enough, you'll start to learn a lot more about different strategies that you can use for pretty much every different market condition. And well, if you look at the S&P, this has been hell. So if you're learning to trade in this market, when it goes back to this market, you are going to have a much easier time than most people. But if you can survive in this, that's great. If you can break even in this, awesome. We're interested in showing you how to profit in this because this volatility pays the freaking bills when it comes to price action trading, hands down. So at the same time that you're honing those skills to be able to make money in a market that's just crazy and focused more on traders and investors, in the long run, you'll be able to utilize the skills that you learn in that market condition to become someone who's more of a passive trader, where you're just adjusting positions and stuff. And that's what all the option stuff comes into play. Because if you start learning how to wheel trade, or how to be an option seller, or how to be trading debit spreads or converting debit spreads, every strategy you learn in volatility will benefit you when the volatility goes away. And it eventually will. Eventually things tend to stabilize, at least for a time. And you can make use of it. That's all. Just kind of give a rundown of what we're doing and why. Yeah, man, you too. Have a wonderful weekend, and glad we can hang out and learn and profit together. That's the best part. You too. All right, so we're back to a test of that previous accumulation line. I might have actually moved it too much here with my 5-second chart. I might have dried it up. It needs to be down here. Revisited it, tested it, rejected it. We can accumulate here for a while, and either A, we break out a bullish measured move, hit the 392 again, or we fail and we come back down. This looks like a nice little rounding bottom reversal, but like I said about rounding anything, they love to fake out and rip the other way, so just be cautious here. Plus, it's achieved a 50% retracement of this trend here with a wick. Alright guys, well, I'm going to go eat some lunch and get prepared for the rest of my day. And with any luck, if we have some good volatility into the close today like we did yesterday, I'll get back on voice and we can do some stuff. See you guys later.